sensation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. We have a lot in store for you today. First, I want to say we have Larry live trading tomorrow. We are all good to go for that. So if you have not checked that out, I'd recommend going and seeing if you can get in there, because it's really it's a good time. You know, there's a lot of people. Good questions are being asked. Larry answers your questions while he's kind of trading live, and it's just nice to have someone with such experience next to you while you're trading. Additionally, we're going to have Tim Ord of the Ord Oracle on today. Let's take a look at what we got going on in the market. With the composite up about 0.63%, the Dow Jones Industrial off about 0.43%, the E-mini up 0.09%, the zip that SPY up about 0.1%. The dollar taking a little bit of a breather here up at that 104 level, but still snugly above it. You have crude oil coming off a little bit today, but still in the 70s. The gold contract. So the gold contract is up 0.68 right now, trading at 2,748 off its high of 2,772. We take a look a little bit, maybe at Newmont before we keep going. They get smoked. Off 15% right now. Yeah, so let's take a look at that just quickly. Of course, we were talking about how they were going to have their earnings posted yesterday. They did not do too well on them. So it represents an earnings surprise of negative 2.41%. Came out with quarterly earnings of 81 cents per share, kind of against a consensus, I would say, of 83 cents. That is a little bit better than 36 cents a year prior. I think really, kind of what happened with Newmont, because they didn't do too bad comparatively, right? Like, if you take it in the context of how they've done in the past, they didn't. But I think estimates were extraordinarily high for Newmont, which is kind of what this reaction is. I don't know to what extent that the high price here of 58.72 was pricing in these earnings, to call this a massive dip or something that we're going to recover from. Maybe not right back up to the highs, but certainly off of 49.09. But as it stands now, it's a little bit tough for Newmont. Let's see here. Yeah, so labor is high for these guys. Energy is high for miners in general. So they fell short of expectations, spending more to dig up the precious metal of gold in Australia, Canada, Peru, and Papua New Guinea. Capital requirements were pretty high to get those mines operational, at least in Australia. So, they just were having some issues. Again, I think a lot of this had to do with pretty high expectations that maybe they were not intended or really ever going to meet. Yeah, so, okay, and so here as well. So they posted the highest quarterly profits in 5 years. It's raking in $922 million in net income attributable to shareholders for the first quarter. So that's not so bad, right? And we'll see if we can kind of get a bounce off this. This is pretty high volume compared to what this stock usually does. And you've been moving up. I think I looked at this a while ago for someone who had called in when we were back at the old office. And I just didn't really see anything with the stock. The only types of volume you get at all was back here in April. You get a nice gap up, right? And it just kind of flew along down on low volume and just kind of kept rising the whole way. And then the last, of course, day with volume is today with a big bar down. So we'll see what happens with Newmont. Of course, gold is still doing okay. We're really close to the all-time highs, and this probably still has some gas left in it for sure. You have silver, it's kind of sideways right now at 33.81, and then copper up about 0.66% at 436. You have the Russell up modestly at 0.12. See if anything else is coming out. Somewhat interesting. You have the bonds kind of coming back up in price, which is nice. Oh yeah, man, this is like crazy. I'm not a Tesla investor. I'm not, which probably is my detriment a lot of times because shorting this stock, it just gets you into a bad situation every time. And I'm pretty sure we say that on here. Like, there's a lot of issues with Musk, right? I mean, of course, if Trump wins, Musk getting into some cabinet position, I would imagine that is going to be a super sweet target for some kind of antitrust investigation if he is still on the board in these companies or if he's in any way affiliated with them at higher levels, which I can't imagine that he would, want to relinquish that kind of control. But as it stands now, you short this stock and you get burned so heavily. And this is a massive gap up on pretty huge volume. So let's take a look about that. Yeah, so improved operating profit margins, automotive gross profit margins, excluding the benefits of regulatory credits, which is awesome, and better earnings per share than had been expected from July to September. Reported better than expected net income and its lowest cost per goods ever sold of about $35,100 per vehicle, which is impressive. Again, I'm not really rocked with Grok or whatever, the AI model. I believe that will help in some capacity with, the automated driving. That, in my opinion, is the long-term play for Tesla, right? It's that AI trained on all of the data that it has for self-driving. I believe that we will get to some point, at least in cities, where people will be taking these kind of autonomous vehicles. And Tesla, of course, is going to be one who's going to provide that data unless there's some kind of competition with it. Google obviously can compete on that kind of level, but I don't know if they want to keep that kind of stuff for themselves. But Tesla is definitely the one playing the most in this realm. So it actually is a really interesting AI and data play as well on the long term. But I always get, freaky at these auto companies themselves are a little bit weird for me. I know I'm in Rivian. I don't know how that's doing today, but $828 billion market cap wise. PE actually isn't insane or anything like that. But yeah, in my opinion, I just don't play Tesla ever. I think these levels are kind of high for me at least. And but if you were, just don't short the thing, especially around earnings, because it always just gets salvaged. And Musk is super good at talking himself out of these kind of situations. Since we're talking about Tesla, I wanted to speak a little bit yesterday, but we kind of didn't have enough time for lithium batteries and some of the stuff. And it was just actually great timing because QuantumScape also came out. I was initially going to talk about Stellantis and some of the deals they were doing with solid state lithium batteries, which no doubt is the future. And then lo and behold, today there's some news about QuantumScape. And they actually do something that's super interesting that I hadn't considered. So we'll talk about that. We're going to have Tim Ord on next.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup. You were watching the Tom O'Brien Show while we were waiting to get Tim Ord on the line. We do have a lot of questions to ask, right? SPY had a little bit of a sell-off yesterday. We're kind of recovering. TAD trading at 579, right under that 580 level. And then gold contract is up 0.64%, trading at 2,746. Someone did ask an interesting question: is, the whole Newmont debacle, does that change Tim Ord's view on GDX? Well, we are going to find that out when we get him on here. But it is interesting, right? Like, if there is too much exuberance, right, I would say, in some of these stocks, some of these miners, and things come out and it's like, well, hey, listen, guys, like, that was really a lot to expect of us. Even if the financials are bullish, right? I mean, you can get to areas that are necessarily overbought, but that's why we have Tim come on and he analyzes those things. He can kind of tell, things regarding being overbought and oversold. Okay, as I'm talking about that, let's go over right here to the search bar. We're going to type in oracle.com. And every Tuesday and Thursday, we have Tim Ord of the Ord Oracle on. We have come to really love his analysis. Additionally, if you go to TFNN.com, you can go right over to the services tab, and we have two fantastic educational lectures by Tim Ord. The first one is The Secret Signs of Market Tops. On Tuesday, he was talking about he sees a topping pattern occurring right here. The question is, how do you tell that that's a topping pattern? Well, if you're curious of how to figure that out, you can go ahead and get that webinar right there. And then, of course, we have the 6 secret ratios every trader should know. And oftentimes, Tim includes these in his analysis as well. Tim, how are you doing?
Good. Thanks for having me on again. So
absolutely.
Well, as you want, we can talk about the gold market first, or we can just start with the equities. Would you be down to talk about gold first? Because I know Newmont's in the forefront of people's minds. That was quite a big shakeup, at least for a lot of people. And I think just starting off with gold might actually be pretty good right now. All right, let's go to chart 6.
Perfect.
Anyhow, it's gold. I think it's kind of an anomaly. I don't see any danger. A lot of times if it's news related, it's not usually, it's already worked into the market. I'll put it that way. But anyhow, let's look at chart 6. Chart 6 basically just catches the trend. The bottom window is the GDX 50-day average of the up-down volume. And I took this about an hour and a half ago, 2 hours ago, and the reading right now is 11.0 1-2. What's important about this indicator, anything above 0, the market's considered an uptrend. It doesn't try to pick out all the wiggles of the market, because this chart flipped to bullish, in other words, above 0 in late March, early April, and it's pretty much stayed there. And we're kind of a long ways from 0. So whatever's gone on today, as far as news concerned, I wouldn't be worried about it. Because otherwise we see a lot bigger divergence than what we got. But if you notice, the top window is GDX, and I have a trend line, a dotted blue trend line going across it around 40. So the worst case scenario, I guess you might say, is 40. And so can there be pullbacks here? Yeah, but right now, on even a short-term basis, the trend's up. So I don't see any danger here. Let's go on a short-term view and look at see if there's any short-term divergence. That'd be chart 7.
Perfect.
And if you look back in the pink area, this is December of 2023. I have a kind of a shaded pink area. The top window is GDX. Next window down is the cumulative up-down volume, and the bottom window is a cumulative advanced decline. And if you notice on that pink area, the top window, GDX made higher highs. If you flip down to the next window lower, that up-down volume made lower highs. And if you flip down to the bottom window, the cumulative advanced decline also made lower highs. Excuse me. Let me get a drink here. Okay, that divergence shows up. Now let's go to the next shaded area, which is kind of the blue shaded area. And again, the top window's GDX. There, GDX was making lower highs. The next window down is the up-down volume. It pretty much went sideways. It didn't really back off from its highs. The same thing, the next lower window, it didn't really back off from its highs. That was positive divergence. And if you go again to the next window, which is the August time frame of this year, GDX had a pullback. That ratio made higher lows. The bottom window did make a lower low, but still a positive divergence. And in the current time frame, you got GDX making higher highs. That's kind of the purple area we're talking about. And the up-down volume made higher highs, and also the advanced decline made higher highs. So this is a shorter term type indicator, and it has no divergence in it. So my bet, today's pullback is probably more or less just an anomaly, and the rally hasn't finished yet. I'll put it that way.
I see.
So I don't think of any top of any consequences forming here, because there's no divergence showing up on the advanced decline or up-down volume, even on the short-term time frames.
Right.
So I think we're good.
Fantastic. Yeah, we can move over to the
you'll have these scare things going forward. So this is part of the market, shake everybody out. So
definitely.
That's how I'm looking at it anyhow.
Does a good job of doing that sometimes too. So, well, yeah, let's move over to the equities then.
All right, first window is our chart number 1. Displayed this Tuesday. Kind of shows you where we are right now. This is a sentiment indicator. In other words, this is what the public thinks what's going to go happen. And they were pretty. The bottom window is the equity put call ratio readings on a 10-day average. So that's 2 weeks of put call ratio readings. Next window up from the bottom is the 5-day average of the equity put call ratio readings. If you got readings right around 0.55 in both of them, which both of them are right now, still, even over the last week, the market's pulled back. Those ratios are still relatively in bearish territory. In other words, the buying or the public trading option traders are actually buying too much calls here. They're optimistic, and so you can see what happens in the past. This chart goes back, looks like close to a couple of years, and the dotted lines show the times when those ratios got into bearish territory. So still expect a pullback. We don't think the pullback's done yet. We think at minimum It's probably going to bottom next week. So I'm thinking more fireworks to the downside. The market's been extremely quiet, and usually it's quiet before the storm. So sentiment-wise, we got a chance to kind of scare to the bottom, I think, because there's too many people leaning bullish on the market right now. Let's go to chart 2.
Sure.
Chart 2, bottom window is a weekly SPX fixed ratio. Next window up is a weekly SPX. And anyhow, when the ratio makes lower highs as the S&Ps make higher highs, that's a negative divergence. And those are, well, I can wait.
Yeah, Tim, stay right there. Folks, we'll be right back with Tim Ord of the Ord Oracle after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back everyone. This is Jacob Shoup. We're watching the Tom O'Brien Show. We are joined by Tim Ord of the Ord Oracle. Tim, we actually had a question in the den from AG. And I asked a question, but I understood what he meant after I sent that. He was saying on the second window with the CPC, this is on the first chart, is you often have a dotted line at that 0.55 or the 0.62 on the CPC. I believe he's talking about this blue horizontal dotted line. And he's asking what that signifies.
Right. Yeah, I wanted to talk about that. Let's go back to chart one. This is the equity put call ratio reading 5 and 10-day average. So anyhow, we're in bearish territory on both those moving averages. And what I got, just as a reminder, I update my charts quite a bit. And I put that note in there. It has scenario. I have in red lines what he's talking about.
I think he was referring to the blue dotted line right at that. Almost looks like it's 0.55. Yeah.
Right. True dotted line. So the next low, the scenario is that these two ratios, the 5 and 10-day equity put call ratio readings, should rally back to around those blue lines. So because I didn't put them in there, but previously over the last couple of months, when those two ratios rose up around 0.75, 0.7 area, that would be people buying too many puts, that would be bullish. And I'm thinking that's where those two ratios are going to go. And that's going to help me define where that next low will be.
I see. Awesome. Well, thanks for answering that.
Yeah, so that's I meant to talk about that, but I'm watching how that ratio is going to rise. So if you see a big spike in this ratio, up around 0.7 or higher, then that's another way of saying you got panic in the market, and panic only forms at lows in the market. So if you don't have panic, you don't have a low. So put call ratio readings do panic, and that's one reason. That's another indicator to find panic. So
I see.
So yeah, we'll be watching as we move forward here towards the election.
Fantastic. So, and thanks for the question, AG.
Yeah, that was a good question. I meant to cover that, and didn't think about it. But anyhow, let's go to chart 2.
Fantastic.
This is the bottom window is the SPX VIX ratio on a weekly time frame. Next higher window is the SPX on a weekly, and I got shaded in pink the times where SPX made higher highs, the ratio made lower highs. That's the bearish divergence, predicts the market's going to pull back, and we actually have had a divergence since July, and that divergence is still present. So even though the market has hit higher highs, that ratio continues to make a lower high. So it's still in a divergence going on. But what I'm going to look for on the next low, if you notice, I have a green area. July of 2022. See that green area?
Yes.
Well, the point I'm trying to make there is, if I have a blue line on the SPX where the SPX made lower highs, that ratio made higher highs. The SPX VIX ratio leads SPX, not perfectly, but it's another way to confirm the uptrends and downtrends. So as this market does bottom out, that ratio at the bottom will start making higher highs before the SPX will make higher highs.
See.
So that's another thing I'll be looking for. And this is kind of a bigger time frame. I do have this on a daily, but the weekly is easier to see and see how that works out. So if the market is making a low and this ratio starts making higher, then that means the market's turning up.
Okay.
So that will happen on the next turn up. So that's another thing I'll be watching for. So far, that hasn't happened yet. So even though the market's kind of dead here, it hasn't made any headway since the last 2 weeks. It's been 10 days. This market's gone sideways. So let's flip to chart 3.
Sure.
Chart 3. This is. I went back and checked the 2016 low, the election low of 2016. Where Hillary and Trump were candidates, and also checked in 2020 where Trump and Biden were candidates, and both those bottoms in those two elections, they bottomed back in both market did decline going in both those elections. And for some reason, the 10-day trend did not pick that out. And I think it's just an anomaly. It's kind of unusual. You don't have presidential elections every year or so. But what did pick it out is the RSI of the SPX tilt ratio did. So this is another indicator that it actually should line up and help define that next low. So this is right now, this is current. So we got the RSI up around 70. I think we actually hit 82 going into this last high, as far as the RSI is concerned, and we're just finally starting to back away. When I made this chart, we're at 64.50. Needs to get down around 30. This is just another low. The bottom one was the SPX. That's a possible downside target will be right around that 5,600 on the SPX. There's a gap down there, and it's also the July high and mid-August high. So that area has quite a bit and a lot of times when you go down to support, you do get panic. And I would think that the 10-day trend will show panic, but maybe the only 1 or 2 day trend may show panic. I don't know how that's all going to work out, but that'd be a feasible downside target. But we'll be watching the equity put call ratio readings along with the SPX fixed ratio. So the market actually went a little bit higher than I thought it would, but it does what it wants to do. But still bullish. Bigger trends are up. Internals look fine. This is not up top of any consequence. So I'm thinking, I thought things were going to start lining up here this week, and they're just starting to. So probably next week, my opinion, will probably be a low. The last two elections of November 16th, or 2016 rather than 2020, the market bottomed before the announcement of the president. Right. So once the market knows who's going to be the president, will be the bottom, and so that will be before the announcement. So it won't be 2 weeks away. It'll probably be next week. Be my guess. Could be wrong. That's just where
you see that bottoming.
Yeah. So I'll be looking. I'll let the market tell me where that low will be. So I'll have to wait for it. Right now it's still kind of doldrum here, but it's starting to work in that direction. We don't have time here, so...
Well, Tim, stay there. We'll go on through the next segment so we can finish the charts, okay? Folks, stay right there. We'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined by Tim Ord of the Ord Oracle. Taking a look at the SPX tilt ratio. Tim, I just want to clarify for myself, at least on the 10-day RSI, when it transgresses that 70 level, right? Yep. You know, because you have it pointed going back down towards that 30 level. Is that usually what you see with the 10-day RSI? So, you know, you get this movement up, you know, you pop up above the 70, there's some resistance kind of there, and then we transverse back down to 30. Is that kind of why you're having that blue arrow there?
Well, at this particular time, I am. Sometimes, you know, you get RSI up around, you know, 70 or a little bit higher. Then uptrends that kind of stay above 50.
I see.
So
okay.
I'm not, and sometimes you hit 70, come back down to 30, go back up to 70, but depends what kind of a market it is. You know, we had a pretty hard run up from the September low to looks like about mid-October high. But this particular instance, I am looking for an RSI down to 30 because seasonality-wise, this period of time, especially in election years, the market usually declines into election. So I'm assuming we're going to get down to 30, and we may not. So
yeah, that makes sense.
To 30.
That makes sense. Okay, yeah, awesome.
That answer your question?
It does, 100%. Yeah, thank you. I was just curious for myself. Yeah, we have. Let's move on to the next chart. I think this is just the SPY itself, with the Bollinger Band.
All right. Let's see. This is kind of an indicator I use. It works pretty well, but the bottom one was volume, but the next window up is the daily SPY. And this is kind of a good indicator to use. I use it on the daily, weekly, and monthly. You know, obviously the dailies have a shorter time span as far as rejection once this is triggered. But anyhow, when you get 50% of the trading range above the upper Bollinger Band, I use candlestick charting, or more, a lot of times you'll have a consolidation. And I think I talked about this on the last program, but that dotted line across the middle of that chart is basically a 20-day moving average. And the upper line, the solid line, is 2 standard deviations away from that 20-day moving average. And the bottom line is just, you know, still 2 standard deviations away. What I'm trying to say, with the market up too far away from that line, it usually consolidates at a minimum, usually pulls back to that line, and sometimes it breaks it and goes below it and bounces up, whatever. But if you notice back on October 14th in the current time frame, I have that circled there, and you can see the market's 50% is actually, looks like about 70-80% of the open close is above the upper Bollinger Band, and the market has flipped sideways here. So that was one. It's kind of a cool indicator. It's not hard to look at if you get it. You know, in your toolbox, I guess, it's a good indicator to look at. But the top window, I want to talk about that. The top window is the daily SPX tilt ratio. This ratio pretty much follows the market, and it's basically the equity market against the bond market. So there's two competing markets there. If one goes up against the other too much, or the other one goes down against the other one too much, you get extremes. And the market's all about extremes. But you can kind of follow this indicator to tell you which way the market's leading. If you look back in July, that July high, the market kind of went flat for a while, then actually started turning down. Hit a bottom right at the August low, then went up. And right now we actually turned down. And even though we're up today, if you look at that ratio, this is on a daily basis, that ratio did not move up. Mm-hmm. So on a short-term basis here, that's a minor bearish divergence. So if it did turn up, it would probably mean more sideways in the market. But since the market is up a little bit, not much, it's up 0.25%, that's all. But that ratio has not moved at all. It's still actually made a lower low. So that kind of confirms that, in general, we expect this market still to move lower on a short-term basis. So will tomorrow be a down day? I don't know if tomorrow or not it will be, but eventually we'll start moving lower again, if not tomorrow, first part of next week. So you can see my target a little bit better here. I got a gap there, which is, I think it was September 19th gap, which also happens to lie at those previous highs. That's my downside target. So, we can move on to the next chart.
Yeah, that's awesome. Sure. Okay, the last chart up here.
Yeah, last chart. Here's I don't want to confuse anybody, but the bottom window is the SPY, the next window up is the SPX fixed ratio. If you notice, from late September to mid-October, the market rallied. If you notice, on a short-term basis, the SPX fixed ratio made lower highs. That's a bearish divergence, suggests the market's going to go down. So what I'm going to look for next, if the market does go down, we break below the early October low. You see where that blue line is on the SPY?
Yes.
All right. So my target's, say, 560 on that range. So we break below the early October low. And the ratio, SPX fixed ratio, makes a higher low.
Okay.
That's what I'll be looking for.
I see.
These divergences a lot of times show up on bottoms. It works better on tops on this particular ratio, but it may not happen. But most likely it probably will. So I'm thinking the VIX is probably not going to go as low as the previous low on this next low.
I see it. In that 560, 3 area roughly, where you have that's that gap up from the middle of September, right? And that's what we've been looking at on all these other charts. Okay.
Right, which is also, that red trend line, that's also the mid-July high and the mid-August high. So there's quite a bit of support there.
Right there. Yeah.
So probably on a one-day trend or a two-day trend, you'll probably see panic. But the 10-day trend, for some reason, may not. I'll be looking for the trend reading. You start seeing trend get up around 1.5, around that 560 area on the SPYs. And we have a higher SPY VIX ratio at that same time, even though the SPY is breaking below the early October lows. You're starting to see how the market's starting to form. So anyhow, those are the type of different things I'll be looking for. So it's not like I go be, I feel like this market's going to bottom. I'll have quite a few different indicators that will suggest that will, the 5 and 10 day SPY or the 5 and 10 day equity put call ratio readings may rise up around 0.7 area. The VIX may make a higher low. The trend on a 1 or 2 day basis may reach panic levels. So we'll see how that all develop, and it'll be kind of fun as we go into the next low. We'll be able to do it live. So
Tim, it is unreal when you come on how much I know, at least I learn, and everyone else. Thank you so much for coming on again, and we're going to see you Tuesday, okay?
All right, sounds good. Talk to you then.
Talk to you then, Tim. Guys, if you want more of Tim Ord, you've got to go to ord-oracle.com. You can also go to the services tab on TFNN and get those lectures from him. Folks, stay right there. We'll be right back for a short segment.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We were just joined by Tim Ord of the Ord Oracle. He comes on every Tuesday and Thursday. If you want to see more of him, you can go to the ord-oracle.com, go to the services tab on TFNN, check out the secret science of market tops with Tim Ord and the 6 secret ratios every trader should know. And then additionally, if you want to go back through what we were talking about or you just missed some of it, you can go right over to Tiger Financial News Network on YouTube right after the end of programming. Our producer is hard at work getting all those clips up for you. If you do decide to do that, make sure to give that video a like and please consider subscribing to our channel. It helps us all out immensely. I want to take a little bit of a look at, I wanted to talk about the batteries today, but we're just going to do it tomorrow because I think there's a lot to talk about with it and I don't want to just condense it into about like a minute and a half here. But we take a look at Nano real quick, off 7%, and this is getting smoked compared to the rest of the nuclear kind of market. UEC is actually on a little bit of a bounce right now after pulling back. I don't know, if this is, I don't want to say a dead count cat bounce or anything like that, but we'll see how much volume is up today. Again, this is coming down into really strong volume. So, you'd want to see kind of a rejection near this gap on, some significant volume. If not, you can get kind of consolidation there. CCJ, I believe, is still kind of on its way down. Again, these are all like kind of pure uranium plays. Yeah, off just 0.15 right now. Rejecting this level pretty well, at least. We'll see what happens with those. But then Nano is, for some reason, diluting their stock. So that kind of is not great for a lot of their shareholders. Trading at 18.44 right now. Let's see here. Today announced it as price and upsize firm commitment, registered underwritten public offering of 2.1 million shares of common stock and common stock purchase warrants to purchase, 1 million shares of common stock. So at least that's all right. Being sold at a public offering of 17 cents for gross proceeds of approximately 36 million before deducting underwriting discounts and offering expenses. Folks, thank you so much for joining me. We'll be back tomorrow, 9 a.m. with Tommy O'Brien. We're gonna have a great day of programming. We'll talk about lithium batteries tomorrow at 3. We'll see you then.